This very trade right here on the Telegram channel is moving as predicted all the way to the upside. This is a buy position USDJPY. Look at the trade right here, and market is moving in the predicted direction. In this video, I want to show you the exact strategy and how you can replicate the same strategy on your own on any time frame and on any pair. So if you like content like this, watch this video gradually all the way to the very end as I explain what you should do to implement the same strategy and on any time frame on your own. So the first thing here is this very trade. We took this trade around this very area right here, and the market from this very point have been moving all the way to the upside, and our target is at this very point. Why? Because we have a gap at this very area, which means market can move into this very area and then begin to correct back down before the next move to the upside. So one thing very important here is the fact that before I took this trade, I first of all go to the higher time frame, which is very important, and that was the 1-day chart. If you look at the 1-day chart perspective, it discovered that on the higher time frame, which is the 1-day chart here, market have been coming all the way to the downside. We see retracement, impulsive move. We have retracement right here, market move all the way to the downside. But something very important here is that we mark out this very area, and at this very point there was liquidity grab. One thing that is very important here in this strategy is liquidity grab. If you look at it critically, it is discovered that at this very point this candle go down below this very area right here, and liquidity was taken off the market. So for the fact that liquidity was taken off the market by this very candle right here, then it means that there is a high possibility or high chance that the market is going to move back upward before any move to the downside. And that is the reason why I consider this very position first thing first. And then the second thing is to come to the lower time frame at this very point, which is very, very important. If you look at it, this very area, the same liquidity grab occur on the lower time frame, which is the 4-hour chart. Market was moving all the way to the downside. Look at it right here. Market was moving all the way to the downside from this very point. Market come back down. We have little retracement, and then we have the gap created right here. Market come all the way down, retrace, come back down, retrace, and then come back down. Liquidity grab at this very point as well, which is very, very visible on the 4-hour chart. Once I define that liquidity grab, then I will then look for divergence. That is the second thing we must look out for. Liquidity grab, first thing, and second thing is divergence as market was going back all the way to the downside. And I use the MACD indicator to figure that out, that there is divergence on this very price action. So to point out the divergence to be very clear on this very price action, if you connect from here to this very area right at this very point, you discover that market was coming back down. And if you connect exact same points on the MACD indicator, you discover that market actually diverge, okay, from here to this very point. So market actually diverge, and this is a bullish divergence. Why? Because market was coming all the way to the downside, and then price action was coming back down right here. But look at the indicator, market was moving, upward, and this is very, very important. So divergence, figure it out on your price action. And then the next thing is, after divergence have been figured out on the price action, we have to confirm that this divergence is going to play out. That is a third thing, okay? You have to confirm that the divergence is going to play out and it's not a false divergence. And so to do that, we need some confirmation. And the first confirmation is on this very trend line right here. So I wait for a breakout to happen on this very trend line, which is very, very important. So market come back down right here and break out on this very trend line. Once that breakout occur, was my first confirmation that this very move is going to still continue all the way to the upside, which is very, very important. I need to pay attention to this. So once the breakout happen, it means that the divergence is not false, and that the market is going to begin to move all the way to the upside, which is very important. Now, for me to actually take a trade, which is very important, I go back to the 1-hour chart. Why? Because if you look at this very market, you discover that this very candle right here, this very bullish candle, close above the previous bearish candle, which signifies that market is going to move upward after this very liquidity grab. And then if you move upward, you discover that this very candle moved all the way to the upside, but we entered the trade as at the formation of this very candle, and that was triggered on the 1 hour chart. So on the 1 hour chart, you discover that after the market moved upward, this very candle closed above this very candle and break out of this very level of important resistance. Okay, so this very candle right here, at the close of this very candle, is where we take that position, because now we are very sure that number one, the divergence is not the false divergence, and secondly, liquidity have been grabbed already from this very point, which means market have high capacity, 90% of moving all the way to the upside into our target. So these are the things you must have to pay attention to. Number one is liquidity, number two is divergence, number three is divergence confirmation, just like I just explained in this very case. So that is why we took this very position with this very strategy. So if I go back to the 4-hour chart, you discover that market is moving in this predicted direction right now, and this is over 150 pips. This is very important. And if you look at our target right here, is at this very point of 145.30. Look at it right here. This is our target right here, 145.30, right at this very point. While our stop loss is 141.72 at this very area. We enter within this very price region, which is very, very important, and our risk is just 1% equity, which is very, very important for risk reward management. So that is how we took this very trade, and market is still moving in this predicted direction, and this very market is going to hit our target from this very analysis, and that is why we are still holding. Already we've moved SL to entry point, which is very important. And right now 150 pips above is already down the table, and this is very, very amazing. So to give a brief recap of how this strategy works, first thing first, you have to go to the higher time frame and look for liquidity grab. Once you get liquidity grab and liquidity have been satisfied, which I have done videos on how you can figure out when liquidity have been satisfied in the market, and market is going to move in the opposite direction. In this very case, market was moving down, and liquidity grab and liquidity satisfaction at this very point, market should move upward. Once you do that, number one. Number two, you find out divergence on your price action, which we have right here. Number three is divergence confirmation, which we have right here. And the last thing you need to do, which is the fourth thing, is to go to the lower time frame. In this very case, the 1 hour chart. On the 1 hour chart right here, we see that this very candle close above this very resistance right here, which means market now have capability of moving all the way to the upside, and that is how we took this very trade. And you can apply this strategy on any time frame, on any pair. Follow the rules and you're going to get it exactly. And you can see right here, this is a 1 to 1.64 risk reward ratio. That is above 1 to 1.5 risk reward ratio, which is also very cool if you're looking for a 1 to 1 or 1 to 5 or 1 to 2 risk reward ratio. This very strategy also apply if you're looking for 1 to 2, 1 to 3 risk reward ratio, which is very, very important. So that is the reason why we took this very trade right here, which we are still in massive profit right at this very point. So if you want to ride massive impulsive move like this, use this strategy carefully and you are going to get it done. Consider supporting this channel by leaving a like for this video, subscribe if you have not, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. Join our Telegram channel, link in the description of this video, and also in the pinned comment for more forex updates, trading signal like this, and many more. Join right now. It is a free channel. Thanks for watching, and I will see you in the next video.